Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're here today to discuss your questions. We also have a topic that we wanted to go over, which is options to use your 401k to pay off debt. So if you do have questions or topics you want to go over, whether on this topic or a related or unrelated topic, please chat over your questions or topics. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. All right, so here's what we're going to cover. Understanding your solo 401k, 401k loans, as well as distribution rules. So first, though, we do want to go through the first question that was chatted up, and then we'll go back to the topic of options to use 401k to pay off debt. So our question here, what are the steps to switch the plan documents for the client's solo 401k from Schwab's template to yours? Is there a way I can make the paperwork easy for my client? Also, what will be your fees, setup, and annual? So that's a classic scenario where someone will start out with the basic plan, for example, at Schwab, and then want to upgrade to our plan to take advantage of the service and features of our plan, whether it's the ability to make mega backdoor Roth contributions or the ability to take a 401k loan or the ability to qualify for a tax credit. So, because our plan makes the self-employed business eligible for $1,500 in tax credits. So the process to upgrade the plan is referred to as a restatement, where the plan continues, but now it's governed by our IRS approved plan documents, which are going to allow the individual to do what they want to do, whether it's the mega backdoor Roth, whether it's loans, whether it's qualifying for the tax credits. Now, we are neutral as far as where the accounts are at. And Schwab is one of the top options where customers have accounts. So Schwab offers their own basic vanilla plan, meaning it's their plan documents, plus Schwab has the account there. And then Schwab will also open up accounts, though, that are governed by third-party plans, like our plan documents. So you can have all the features that I mentioned, but still have your money at Schwab. And this could be Schwab Institutional, because it sounds like this is your customer, your client. So if you custody at Schwab, it can be at Schwab Institutional. It's referred to as what they call a company retirement account or CRA account. So when someone proceeds with the restatement, the plan continues. So it's not as if the individual is shutting down their existing plan and then opening a new plan. The plan continues. It's just that the documents that govern the plan are now going to be our documents. So as part of that process, we need to know the original effective date of the existing plan, because when we draft the documents, it'll relate back to that original effective date, and then we'll have the restatement date. And then new accounts will need to be set up, because the existing accounts at Schwab, from Schwab's perspective, those accounts are governed by their plan documents. So new accounts need to be opened up, the CRA accounts, which again can be on the institutional platform, that are governed by our plan documents. And then the cash and assets transferred from the existing accounts over to the new accounts. Now, we do make the paperwork as easy as possible. Of course, it's a 401k, so it is going to be somewhat paperwork intensive. But for example, we prepare the documents to establish the plan within the same business day when someone signs up. We'll prepare the paperwork that's required to open up those Schwab CRA accounts, including the institutional version of the paperwork where the advisor code can be added at the top. As far as the fees, we charge 100% flat fees. So there's no AUM fees. It doesn't matter the value of the account. It's still going to be the same fee. So it's $650 which includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, so for example, next July, if someone signs up here in this July, we would charge our $125 annual fee that covers the second year. And that covers all the ongoing compliance support, whether it's a 5500 EZ, 1099R, both of those are provided as an optional free service. Customers just have to let us know when they need it in a timely fashion, and then we'll handle it for no additional charge. Preparing loan documents. And then, as I mentioned, setting up our plan will make the self-employed business, even if it's upgrading a basic plan to our plan, will still make that self-employed business eligible to claim $1,500 in solo 401k tax credits. So that's going to more than offset our fees for the first 7 years. Let me chat over a couple of quick links, and then let's go through the slides regarding using the options to use 401k to pay off debt. All right, there's the links that I mentioned. Now, this is a common question that we see come up. Folks will try to understand what their options are to be able to access money in their 401k to be able to pay off, say, personal debt, or it could be a home loan, whatever the case is. Now, let's lay the foundation with understanding what a solo 401k is. A solo 401k is a retirement plan specifically for self-employed individuals. It's an owner-only plan. So only businesses that have no full-time W-2 employees other than the owner or a spouse, if any, are eligible to set up a solo 401k. In other words, it's got to be an owner-only business. So the individual would need to be reporting earned self-employment income, say on their personal tax return. Could be Schedule C, could be W-2 wages from their own business, for example, that's taxed as an S Corp. And that person cannot have any non-owner, non-spouse, full-time W-2 employees working for any business owned by that person or owned by a spouse, if any. So if they meet those eligibility criteria, they're eligible to set up a solo 401k. Now, one of the top options we'll see that customers might use to access money in their 401k to pay off debt is a 401k loan. But you have to have a 401k plan that allows for loans. Going back to the Schwab discussion, Schwab's plan doesn't allow for loans, but our plan does. And we prepare the required loan documents as part of our service for no additional charge. Now, the other way that folks might take money out of their 401k to pay off debt would just be to take a taxable distribution. But that's where you have to understand those distribution rules. So we'll talk about that here in a moment. So the big question is, can I use my 401k to pay off debt? The answer is yes. The options are, the short answer at least is yes. The options would be taking a 401k loan. That's where you literally borrow money from your 401k, or just taking a distribution, an early distribution, a withdrawal. So let's go through each option. So how does the 401k loan work? Well, as I mentioned, you're literally borrowing from your own retirement account. You're withdrawing money from your 401k. But if it's structured as a loan, it's documented as a loan, it's within the loan terms, and it's paid back according to those terms, that withdrawal is not going to be subject to taxes or penalties. So what are those terms? Well, it's limited to 50% of the balance, not to exceed $50,000. It needs to be paid back in either monthly or quarterly payments, equal payments of principal and interest, with those payments spread over a 5-year term. Now, the interest rate is prime plus 1%. It's a fixed rate. Or you could use a CD rate, a comparable CD, like say a $50,000 5-year CD rate plus 2, and use that as the interest rate. Now, it needs to be documented on loan documents, right? An amortization schedule, right? A promissory note. We prepare the required loan documents as part of our service for no additional charge. We just have an online form the customers use to give us the information we need to prepare the loan documents, and then we prepare it within one business day. What are some of the pros of taking a 401k loan? Based on experience and client feedback, no credit check. So when you take a 401k loan, it's not like you're going to a bank to get a loan where they're going to run your credit. You're borrowing from yourself. There's no credit check. Likewise, you're not paying the loan back to a third party like a bank. You're paying it back to your 401k. You could think of it that you're paying it back to your future self. As I mentioned, if it's properly structured as a loan within the loan terms and paid back according to those terms, it's not subject to taxes or penalties, even though you are withdrawing money from your 401k. Even if you don't pay it back, yes, it's going to be now going to default. Yes, you then have to pay taxes and penalties on the unpaid balance, but there would still be no impact on your credit score. What are some of the possible cons, possible risks? Well, you are reducing the balance of your 401k. Now, there is going to be a built-in return because you got the interest rate, prime +1, but it's possible that if you had left the money in your 401k, there might have been even greater returns on that money. So the individual would then miss out on those greater returns greater than the interest rate. Double taxation. Folks will bring this up because when you pay back the loan, you pay it back with after-tax dollars. So if it's a pre-tax account, or if you could borrow from your Roth solo 401k, in which case if you later withdraw money from that Roth 401k as a qualified Roth distribution, then that subsequent later withdrawal would not be subject to taxes or penalties. But if you're paying it back with after-tax money and it's going back into your pre-tax account, then when you withdraw the money as a 401k distribution, you're going to have to pay taxes and possibly penalties at that point. As I mentioned, if it goes into default, so default would be where the payment is not made by the applicable grace period. So the grace period is the end of the quarter following the quarter in which the payment or payments are missed. So if 2 payments are missed in the first quarter, both of those payments need to be made up by the end of the second quarter. If not, the entire unpaid balance goes into default, therefore subject to taxes and penalties. So ultimately, that could be less for your retirement, right? That's a possible risk. Now let's talk about early withdrawal. So there are distribution rules when you're talking about withdrawing money from your 401k account. So generally speaking, one cannot withdraw funds from their 401k before age 59 and a half, unless you meet an exception. So one of the most common exceptions would be money that was rolled into the plan. So if you rolled money into the plan from, say, a former employer plan or a pre-tax IRA, those funds can be withdrawn at any time without having to meet a triggering event. But if one takes a taxable distribution from their 401k, there's a withholding requirement. So for example, if you take a $10,000 taxable distribution, the individual is going to have to send $2,000 as a withholding by the 15th of the month following the date of the distribution to the IRS. So they'll only actually end up with $8,000. And then they're going to still have to report the entire $10,000 as income for the year of the distribution, which then may, if the 20% doesn't cover the taxes and penalties, there's a 10% penalty if under age 59 and a half, then you'd still have to pay more once you file your taxes by the following year. So the entire distribution is subject to taxes and possibly penalties, the full 10,000. That takes us to the end of the slides that we wanted to share. If you're finding this to be helpful, if you please like this video, it would be fantastic. It would help us get the word out to others that are, self-employed, maybe looking to understand how this works. So we'd really appreciate that. If you subscribe, you'll get notifications of when we go live. We go live every day, and we'd like to bring content like this and also answer questions that you might have, whether on the content that we come to share or other topics. So if you subscribe, you'll get notifications of when we go live. We also invite you to our community, mysolo401k.net/my-community. We have forums. We have a library of videos and webinars. We have an AI you can access for free at solo401k.ai. It's a great way to find answers to questions quickly, find resources. To join the community, just email us at business@mysolo401k.net and we'll get you access to that community. It's totally free to join. All are welcome. Like I mentioned, it's not just for customers, but anyone that might be interested in these topics. Well, it looks like that takes us to the end of the questions for today. Thank you so much for the great participation. Please continue to engage. Please like, please subscribe, as I mentioned. And until next time, thank you so much.